Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news for March 1st, 2018. Let's get started with the reports. Here's what we have. ISM Index unemployment jobless claims, which is, by the way, at its 49-year low. Good job for the U.S. economy. And manufacturing data all really have been putting pressure on bonds this week. Personal income in this core CPE, the core CPE, which is what the Fed uses for kind of a gauge on inflation, that really was kind of neutral. However, in regard to that, the new Fed Chairman Powell, he said there was no signs of wage inflation, which that along with construction spending have actually been really helpful for bonds. As far as the charts, let's see how this has impacted mortgage backs. We can see since January, if you've been watching all my videos, it's just like, bonds continue to sell off. But since January, we have finally found our plateau. So look at this, guys. Over the last 4 trading sessions, bonds have actually broken out of that downward trading channel, and now we're trading flat. Whew. This is a nice relief. It's great to see that we found a little bit of footing. To kind of quantify where this puts us today, we're currently trading at 102.51. But back in January, when FHLMC, Freddie Mac, released average consumers getting 4.03 rate at half a point, well, that's about $1.50 worse. So what that means is at today's market, the average consumer may be paying closer to 2 points for something of a similar rate. So, so at any rate, we are seeing definitely still pressure on bonds and rates continuing to go up. But it is great to see this footing. Now the question is, how long is this footing going to last? Well, first off, my forecast, my last projection was a miss, and it wasn't a miss by a little, it was a miss by 41 cents. So this is kind of unique for me. I don't usually miss by that far. My last miss was only 11 cents. So why the big miss? Well, we broke out of that downward trading channel, which is actually great news for bonds and great news for you as a consumer. So, so if I'm going to be wrong, I love to be wrong this way. But what's the outlook? Well, on the short term, the analysts do believe the bonds are going to trade, kind of flat, and kind of bounce up and down, pretty close to where they're at. But I believe we're right at the top end of that trading range, and so and long term we're still getting pressure. So the analysts are consistently saying, hey, bonds are probably being traded a little bit bearish. They do think bonds will continue to sell off, and that continued pressure of the quantitative easing or the government's lack of reinvestment into mortgage-backed securities, that's what's really going to be pushing down the bond prices and bringing with it some likely higher rates or fees. So here's my forecast for next Thursday. I think bonds are going to they're currently trading at 102.51, as you can see up here on your screen, but they're probably going to be, in my forecast, trading between 102.50 and 101.90. So I think if they do trade flat, I believe we're probably at the high end of that trading range, but I think we have room to sell down as much as 60 cents. So that's a little over half a point, guys. So if you are deciding to float right now, which is okay, just do it very, very carefully and keep your eye on the bond market on a daily or intra-daily basis. So that's it for now. We'd love to hear your comments. Leave those comments down below. We answer all of our subscribers' questions. And don't forget to hit that like button before you go. And if you'd like to subscribe to the channel, click that guy on the top left, and that will give you a little alert when we release new content, which is generally every Thursday. If none of this made sense to you and you're like, man, you know what? I just wanted to figure out how to get the best mortgage rate and figure out the best time to lock in my rate. That's okay. Click Mortgage Bonds 101 at the top right, and it'll teach you the basics that you need to know as a consumer when you're trying to figure that out. Anyway, that's it for this week. We'll see you next Thursday. Take care, guys. Bye-bye.